Hi, everyone. Good morning. This is Matthew Cruz with Comstock Investments. I'm going to be sharing with you the January supply-demand report that came out this morning. Futures trading does involve risk. I'll give you a brief moment. You can read through that. Always got to have the disclaimer page. So the big news was that the USDA reduced the harvested acres for corn quite a bit more than what the market was looking for. That's why you're seeing a good uptick in prices today. They did increase yield, which I think a lot of traders were expecting that. They were expecting maybe a modest boost in yield, and so we did get that. However, a lot of that was offset by a reduction in the harvested acres, and so it offset most of that, or slightly more actually, and so that caught the trade off guard, and so it was kind of a bullish surprise. But you can see here that the total production for the year then sitting at 13.73 billion bushels. Harvested yield 173.3. Harvested area came in at 79.2, and the average trade was looking at 80.7. So you're talking 1.5 million acres less. So fairly substantial, especially this late in the game. From last season to now, they're still making those changes. We kind of saw this last year at this time. I think they made some major changes late in the winter, and so we had that made a lot of changes to the market. And the soybeans came in at 4.276 billion bushels, below what the average trade was looking for, below the bottom end of the range is 4.321. And that was mostly just because the yield was down. The trade really wasn't looking for that. The kind of the lowest end of that trade range is 49.9. They came in at 49.5. And so that while you're also seeing major movement to the upside in soybeans, they also reduced acres by 300,000 from what the average trade was looking for anyway. And so right on the very bottom side of what the trade range was at 86.3. And so overall, pretty bullish surprise. A lot of negativity coming into this report, and so arguably, I think even if the report had come in at neutral, I think you would have seen an increase in prices just because there's a lot of negativity baked into the market. But the USDA supply surprised a lot of everybody, I think, with the reduction in those harvested acres, and so that's why you're seeing a bullish surprise today. You got to get those every once in a while. Looking at grain ending stocks, production came in at 1.242. This is really the meat and bones here, that the average trade was looking at 1.31. And so we actually came in a modest amount below that. Last month we were at 1.257, so only 15 million bushel less from last month, but the trade was actually looking to add to that. You can see some people were expecting it to go up to 1.44. And had we seen that happen, I think you could have seen corn down 20 cents rather than up today the way it is. Similar situation, soybeans came in at 210 million bushels for ending stocks. Average trade was looking for an increase from 220 last month to 242 on average. That's what most people are looking for, and it ended up kind of coming in towards the bottom end of that range, which was, they set that at 205 and came in at 210. So again, good news for the soybeans. Similar story, I think, in wheat a little bit, that the average trade was looking at 582 and then came in at 567 million bushels. So last month, not much change from last month, though, at 571 million bushels. Some modest changes in Brazil's soybeans and corn production. They increased Brazil's soybean crop by 1 million metric ton. Not a huge change there. I think CONAB actually reduced theirs, and so they kind of switched places between Brazil and CONAB. The corn, they also reduced by 1 million metric ton from 126 down to 125. I think some of that could be due to some of the drought in the south part in Rio Grande do Sul. That crop has gotten dinged. pretty good down there. I think the biggest bullish news is in Argentina right now, that Argentina came out this morning and actually announced that they're revising their soybean crop lower by 25%, which makes up as much as 13 million metric tons. And so I think if you go off what they were projecting, that would be a 37 million metric ton number, or USDA just went from 46.7 to 45.5. And so if that's true, USDA is well behind the curve here, and trying to play catch up to what's actually going on, I think, in Argentina. It's pretty bad right now with the drought, and continuing to get worse every day. In the corn, the USDA came in at 52, left that unchanged, which I think is, frankly, kind of silly at this point. I think a lot of people were expecting that number to be lower. Looking at Ukraine, not really much change there, but I still thought it was important to just kind of project, how much difference there is from last year to this year. That just to remind people that there is roughly, what is that, a third less production. And so even though the grain corridor is still flowing, although not what it used to be, it still doesn't mean that the production is going to be there. And so I think this, between the grain corridor being off by a third plus production being off by a third, it still is going to hamper global production by quite a bit. And I don't know that we're still going to be able to make up for all that. So that's what they're projecting for Ukraine corn and wheat compared to last year at this time, 42 and 33. This is the day that they actually came out with the December 1st quarterly grain stocks, just to give us an update on where inventories stand, and that came in at 10.8 billion bushels compared to 11.1 in the corn, was what the average trade was looking for. So kind of bullish that it came in below that. Soybeans, a little over 3 billion bushels. The estimate was looking at 3.1. Wheat, 1.28 billion bushels compared to 1.34 billion bushels. And so all three categories, the actual USDA numbers came in below what the trade was looking for. Looking at global ending stocks, corn came in at 296.4. The average trade was looking at 297.8. Soybeans came in at 103.5. The average trade was looking at 101. And so globally, they actually added a little bit to what the ending stocks are for soybeans. Looking at wheat, came in at 268.4 compared to 268.2. So pretty close to what the average trade was looking for in the case of wheat. So breaking down the corn balance sheet, this kind of shows you where we get these numbers from. So you can see harvested acres dropped by 1.6 million acres. We get an increase of 1 bushels per acre. Ultimately, what that meant to production, even though we got that increase in yield, it was more than offset by the loss in acres. So that sent our production down 200 million bushels. However, they make up for some of that, or a lot of that. A lot of the trade was looking for major reductions, I think, in kind of feed and food usage, but we didn't see big numbers, big reductions there. So 25 million less in the feed, 10 million bushels less in the food and seed usage. Most of it came from the exports that I think was to be expected. I think most of the trade was expecting to see not much change to zero change maybe in harvested acres, but we're expecting to see the 150 million bushel reduction in the exports. And so luckily that came in and kind of saved the market. I guess you could say it could offset a lot of that. So ultimately we saw ending stocks being reduced by 15 million bushels when a lot of the trade was frankly expecting ending stocks to increase. Soybean revisions, we see here that they reduced harvested area by 300,000 acres, and the soybeans yield also ticked down by 7/10 of a bushel, which is frankly a pretty large move lower, I think, at this late stage of the season in January. That decreased the production by 7 million bushels. But again, a lot of that was offset by reducing the exports. There was also some minor alterations to the residual category here by 4 million bushels. And so ultimately it reduced ending stocks by 10 million bushels, which isn't a lot. But what you have to remember is most of the trade and the market was expecting it to be an increase rather than a decrease. And so it just shows how, despite the relatively large crop, pending crop, ending stocks are still pretty tight overall. Looking at wheat, they did reduce feed consumption in last year, which then carried over to the beginning stocks this year. So that's how we have this increase of 29 million bushels here. And they did also increase, however, the feed usage by 30 million bushels. So that offset that increase in beginning stocks. And so that's why we get this 4 million bushel number lower in ending stocks. So not a huge change there, but again, the trade was probably looking for them to add inventory rather than decrease it. This is the March corn contract right now. This is not the close, but you can see here what a big trading range we've had for this day. The chart going into the day was not looking very good. Hopefully this is the start of something, but I wouldn't say that we're quite there yet. We want to at the very first break above this trend line here, which is right about the 680 level. Then we want to break above this top end resistance level about 685. If we can do that, it's possible then we could find our way back to $7. But that's easier said than done. So we did have a nice day at the time. We're up 16.5 cents. But there's a long ways to go yet. It's possible yet we're going to run into some major, I think, resistance here at the 680 and may have find some trouble moving beyond that. This is actually the weekly chart in the March soybeans. I thought the weekly chart kind of give you a better idea. The soybeans look a lot better, a lot more interesting than the corn does actually, where we've been continually able to kind of grind higher. Every time we reach the bottom support level, we bounced off that, and today is no exception. This is not the close, but we're up almost 30 cents right now. We're not at the contract high. That's up here close to this 1570 area, but today just provides more ammo, I think, for the bulls going forward. That says, hey, ending talks remain tight. Yes, that Brazil's looks like they're having a big crop, and we've kind of reached peak acres, and yield wasn't there last year the way they thought it was, and so that yield reduction does give us a shot to get back up possibly to this 1570 area, but you're going to find some pretty heavy resistance at that point. Looking at wheat, we're up 3 at the moment, but you can see they still had a pretty good trading range. They were down to 724, I think, this morning, and so they got a pretty long tail. We'll see if the market closes and can maintain that momentum, but it's possible. Wheat has just gotten the crap kicked out of it, as you can see here in the last few months, and especially since the market peaked earlier in the year when Russia invaded Ukraine. And so we've been looking for a turnaround in wheat for a while. We are I think well below levels when Russia invaded Ukraine, and so hopefully this might be a turnaround for that. It's possible. We'll have to see how the day ends up, but we might have a kind of key outside day reversal in the wheat. So not a lot has changed, I think, in the overall story since last month. I think inflation and interest rates are still the #1 story. If you're a bull, you're going to say, hey, I think the Fed might be pivoting their interest rate level soon, and so that will help provide a boost to the economy. The Ukraine war is continuing to diminish production in that country, and they were a major global producer of corn and wheat. And despite the grain corridor still kind of working, it doesn't mean that their production levels are going to be back to what they were pre-war. you could talk about that, there's a lot of drought still lingering in the Western Corn Belt. We need a lot of rain if we're going to replenish those soil moisture levels. There is dry weather in southern Brazil, especially in Argentina. Argentina is in a rough, bad place right now. Basis levels are still strong, more so in the Western Corn Belt, I know, but historically they're still doing pretty good. I think today was another example of why we've also kind of reached our peak acres in the United States. That we saw a bigger reduction in the harvested acres in the United States in the corn than what I think a lot of the trade was looking for. Now, if you're a bear, you're going to point out that the corn exports are weak, and today was just another example of that. It seems like this is maybe the third report in a row that we just keep losing 150 million bushels a month in exports. Hopefully, we're entering the new phase here where U.S. exports will begin to pick up as Brazil is kind of running out of corn to export. So I think you'll see that switch here next month in February, where hopefully U.S. exports will begin to tick up. However, I don't think that they're going to be able to make up for a lot of the export loss that they've had so far. Of course, rising interest rates, I think the interest rates will still continue to tick higher, just maybe not at the same rate that what they have in the past. And a lot of people are looking at what's going on in China. A lot of increase in COVID, and I think a lot of demand could be getting hurt there, and what's going on with China and kind of opening up with COVID. And then, of course, the Brazil production is going to weigh on the markets. I think a lot of that is starting to get baked in, but there's a long ways to go yet. So I do think that the Brazil is on track for a pretty big soybean crop. I don't think the USDA is far off on their projections. I think it's still pretty early for the corn maybe, but I think the soybeans, they're starting to harvest now in Mato Grosso. So thank you for watching. If you have any questions, feel free to give one of our brokers a call at 712-227-1110. Thank you and have a nice day.